Hey everyone, welcome back to the 1% channel. In today's video, we'll be covering the top 3 stocks of the week. Before we get started, I'd appreciate it if you can like the video and subscribe to the channel, with notifications turned on so you don't miss out on any new videos. Okay, so without further delay, let's get straight into our top 3 stocks of the week. Coming in at number 3 spot, we have Etsy, ticker symbol ETSY. When it comes to e-commerce, Amazon tends to suck all the air out of the room. However, the shift from the offline sales to online sales is so massive that lots of companies are destined to win. Etsy has clearly established itself as one of those e-commerce winners. The company's platform connects buyers and sellers of homemade goods, which is a growing niche that makes the company different from the other e-commerce competition. Etsy reported better than expected fourth quarter results after the bell on February 25th, including soaring profits and 129% revenue growth. The stock rose more than 8% in extended trading following the report. Here's how the company did. Earnings: $1.08 per share versus 59 cents per share expected. Revenue: $617.4 million versus $516 million expected, which is amazing. Although Etsy smashed earnings expectations, the stock did go from an all-time high to $250 per share, all the way down to about $180 per share. Now you may ask, why did such an amazing company get beat down so hard although they had amazing earnings results? The answer is pretty simple. As we know, if you invest in the stock market, we had a massive correction at the end of February, due to growing fears of inflation caused by the 10-year Treasury bond rate spiking up, so every stock was beat down very hard, including Tesla, which was down about 30% from its all-time high just last week. But things seem to have finally found a support and now recovering, so let's keep our fingers crossed that the bull market continues. I was personally super excited that it went down to around $180 to $190 per share because it gave me a massive opportunity to break the piggy bank, shop for some more Etsy shares at a massive discount. Etsy now sits at around $220 per share at the time of recording this video, which is a little higher than where it bottomed out. But honestly, it's still at a pretty nice discount from its all-time high of $250 per share. At this current price, I'd only nibble in, but if it comes back down around $200 per share, I will definitely buy a lot heavier. Alright, coming in at the number 2 spot, we have Pinterest, ticker symbol PINS. Pinterest is the social platform for inspiration, designed to help users visualize their dreams and turn them into reality. The company's growth strategy plays into this purpose, focusing on making Pinterest more shoppable and scaling its ad business. Pinterest smashed earnings estimates last week. The image-based social network reported 76% year-over-year revenue growth to $705.6 million in the fourth quarter, well ahead of the analyst consensus at $645.6 million. Its bottom-line growth was even more impressive as adjusted net income nearly quadrupled to $294.3 million, giving the company a profit margin of 42% during the seasonally strong fourth quarter. On a per-share basis, adjusted earnings jumped from 12 cents to 43 cents, beating estimates that averaged 32 cents. Like every other stock, Pinterest also sold off due to the technology sector correction we had. Pinterest went from about $90 a share to as low as $60 a share, which is an amazing discount, which also allowed me to break the piggy bank and go shopping for some Pinterest at an amazing discount. Pinterest is now sitting at a price of $75 a share, which is still a very good discount from its all-time highs at $90 a share. I personally will continue nibbling in around $75 a share, but for me to buy heavy, it would definitely have to come down to under $65 per share. Alright, finally coming in at the number 1 spot, we have Upwork, ticker symbol UPWK. Upwork is a marketplace for freelancers in fields like writing, graphic design, and web development. The site helps professionals find projects, communicate with clients, and get paid. If you're a new freelancer or working in a new field, you can rack up valuable experience without always having to pitch clients cold. Shares of Upwork Incorporated rallied more than 18% in the extended session. February 23rd, after the freelancing work platform reported adjusted fourth quarter profit and sales well above Wall Street expectations and said it grew the most since going public in 2018, which is amazing news for all of us investors. Since Upwork's earnings release, the stock has also gotten a little beat down due to the technology sector sell-off. It went from its all-time highs of $60 a share all the way to $40 a share. But again, I saw this as an amazing discount and broke the piggy bank once again when shopping for some Upwork at an amazing discount. Upwork now sits at around $50 a share, which is still very much so at a discount from its all-time highs. But I would buy heavy under $45 and nibble in at around $50 a share. Alright, well that's a wrap for today's top 3 stocks to buy video. If you guys enjoyed, please make sure to like the video, subscribe to the channel with notifications turned on so you don't miss out on any new videos. And finally, please feel free to comment what you guys think of my stock picks and video. As you can see, this is my first video on YouTube, so any advice will be highly appreciated. Thank you so much for watching and have an amazing rest of your day. Peace!